everyone. Month of February is finished, and now we are here with another real estate data. I'm Brian Khatambakhsh, team lead at Khatambakhsh Real Estate Team and BrianSoldGuarantee.com. We do this every month, and we analyze this number, and we tell you what it means to real consumers. If you like what you see here, you can always follow us. You can also turn on the notification, so when we have a new update, you will be notified. Okay, here are the numbers for the month of February 2022. Numbers are astonishing. Let's not kid ourselves here. 863 units were sold. That's total number of freehold and condos in Mississauga. And only 517 active listing for sale. Now, if we compare this to the same time last year, it looks like we still had the same hot market back then. The sales were up. So if you look at the sales from last year to this year, you may say that the sales has dropped. But that's a little bit misleading, because if you look at it the way we are looking at it, you will see how much more vibrant this current market is versus last year. Last year, sales were up about 1022. However, the total number of active listings was 730. I'm going to introduce you to this concept, what we call inventory days per market. What it means is basically, if we assume that no more listing coming to market as of today, okay, nobody else listing their home for sale, it's gonna take, last year it would have taken 21 days to sell everything that was in the market. And that's how we calculated it. You divide the 730 by 1022 and you get 0.71 month, which is equivalent to 21 days almost. If you do the same thing for this year, it's 18 days. So that means, relatively speaking, the number of units were down because there aren't that many things for sale. There are buyers that are making bids and after bids and after bids, and they cannot get anything. And that has an effect on the total amount of sales. So sales has been damped by that. Moreover, we just had the announcement from Bank of Canada that they just increased the interest rates, the prime rate interest rates, by 0.25. They call it quarter base. And I'm going to have another video to talk about that. The hype for that was a lot more effective earlier on than what it was right now. The change in the mortgage market is not all that significant, to be honest with you. Fixed mortgage has gone up since a few months ago. We know that. And this number will not have a huge impact on it. However, the variable, if you had a variable mortgage, you know that your variable mortgage will go up by 0.25 a point. But I'm going to calculate that in another video and show it to you that numbers are insignificant. And moreover, if you recall, the government applied this stress test on 2017, which consumers are now are being qualified for interest rates that are much higher than this. I believe right now it's 5.29. So this little variation in interest rates, and everybody was saying that, oh, I'm just waiting for interest rates to go up so the prices will come down. We don't see that happening. That's, first of all, not significant enough, because it's not coming in terms of 2, 3, 4%. And it's coming gradually. And most people have already been qualified for much higher interest rates. So it's not they're gonna leave their home and run, and we're gonna have a lot of power of sales and things like that. So there is a little bit of a buffer cushion that government created back then. However, from what we see is that market's still very vibrant. Many people won't sell because they don't know if they can get anything. So they kind of reserved in terms of where they want to go, and not very optimistic as of what they can get. And buyers, they keep trying, but every time I go to any multiple offers, there are 5, 6, 10 offers, and numbers are always surprising everyone to the upside. Going forward, that's a good thing to think about. Like month of March, look, if market goes the way it is right now, the demand is outweighing the supplies. Obviously, demand is much higher than the supply. And this trend is going to continue until something happens drastically outside the real estate market that will control it. Now, we had something like that in 2017, and government came and, they came up with this new legislation and changed the mortgage rules, and they brought the stress test and all those things. Unless something like that happens, this trend is going to go on. It may not be as steep, or a little bit slower, or a little bit sharper. Who knows? The demand is still there. People are looking for bigger homes, better homes, and a lot of investments as well. And since the corona is over, the immigration started. We have new people coming in, and I had a big chunk of every year's immigrants come to Ontario, especially in Toronto. So all these things are not going to change all that much. And this year, I believe, is the provincial election year. So look for a candidate or someone come up with some big ideas to come and try to damp this real estate market. We keep hearing that people want to say, oh, you know what, somebody got to stop this real estate market. This is not done by a speculation, people. This is people needing real home. They are in need of a home. Housing, shelter is a basic necessity of life, and people are looking for that. Unless something happens that the supply will be a lot more, they can help on the supply side of the market. This trend will carry on. All these things that was done, even back to 2017, if people recall when they did the stress test, market went down a little bit. I don't remember exactly how many percentage, but it was down toward the end of the year and stayed flat for a couple of years, almost toward the end of the 2019. But then all of a sudden, it went up exponentially, caught up with whatever it lost, and a lot more than that. I think we are up 25% from the peak of that 2017, just from 2019 to now, with the COVID and pandemic. So you can tell that the underlying demand for the real estate in this area is still pretty healthy and pretty solid, and it will be even there will be more demand for it. Short term, there may be some variation. There may be some new ideas from some politicians, so they damp this for a while. But in long term, if you look into 5 years, 10 years down the road, you're not buying this like a stock to quickly sell it in three days or 2 days. Even if you sell something today, you usually get 60 days on average to get the money out of it. So the real estate is not that liquid of an investment, and it's not something that people can live without it. You gotta live somewhere. You cannot live on the street. So because of that, look, if you're looking at long term, still very healthy. Do not worry. Real estate is the best wealth building vehicle with the lowest risk, to my opinion. And a lot of people. We know a lot of people have done that. They never mind this little ups and downs and the hype of the market. I hear so much people come and say all these negative things. Look, there may be some adjustments on the way. There may be some correction. That's for sure. But the crash? I'm not an expert. Hey, but I see what I see. It doesn't look like it. If anything goes in the market 5% below the asking, it's going to get 20, 30 offers that will just go right back where it should be. That's what we see right now. If it changes next month, I promise I tell you. Until then, turn on the notification, follow us so we can keep you posted, and have a fantastic month. Bye-bye.